It's interesting, though, just how the narrative has shifted here when it comes to the property market, given the 16-point plan. Does your outlook change in any way, given what we've seen so far?
Yes, thanks for the question. We have maintained a negative outlook for China's property sector, which reflects our expectation that property sales will decline by around 10 to 15% in 2023. And also the funding condition, we will expect to remain tight for financially weak developers. Although the decline of 10 to 15% is narrowing from the 28% decline that we have seen in the first 10 months this year. And the 10 to 15% decline forecast remain on the high side. And about the 16 new measures, we expect that would support some developers' access to funding and improve their liquidity, but it will take time to take effect.
Right, and it does seem, Kaven, David here, by the way, it does seem this is more really to help the developers themselves than really create demand. So I want to ask you about what inventory looks like of empty apartments next year. That's one part of the question. And also where you think sales will be as far as the property market's concerned for next year too.
Yeah, in terms of sales, we expect that it will remain on the weak side. We expect a 10 to 15% of decline year on year compared to this year in terms of contract sales. And inventory level, we will expect that most of the cities will remain largely stable because the weakening supply also counterbalance the effect of weakening sales. But having said that, we also see that the inventory level in low-tier cities could elevate it more, given that the sales situation in low-tier cities is much weaker and because of their weaker economic fundamentals.
Now, Kaven, if we look below the hood, if you will, liquidity is of concern. On top of that, we've seen deterioration in quality there, but not markedly as much as people had thought. How are you seeing all this? Because there's also another aspect, there's a human aspect too, which is once bitten, twice shy with regards to it. So give us a sense of how you're rating these companies.
Yeah, the credit situation for many of the Chinese developers has been under pressure since late last year. And many of them have some liquidity pressure at this moment, considering that sales have been declining and therefore cash flow generation has weakened. At the same time, many of them have high refinancing needs, actually also further pressure the liquidity position. But the latest measures that the government unveiled is targeting to support these developers' financing assets so that some of them could be able to issue onshore bank with some government support. And also some of them could discuss with banks or trust companies to extend the financing for 1 year if they're having some loans due within the next 6 months. And that could alleviate some of these developers' liquidity pressure. And for our analysis, certainly liquidity assessment is important, I just said. But other than that, we're also looking at the fundamental of the companies, including their operation, their sales, their financial position.
So maybe help us separate that a little bit on who's likely to come out of this better and who might have to be, caught in this sort of consolidation in the industry as well. How do you separate the winners and losers? And is there more room for credit differentiation?
Yes, certainly. In this very challenging operating environment, we have seen increasing degree of credit differentiation and also industry consolidation. Developers with government background and all have a very strong financial position that we have seen they actually perform better in terms of sales and also in terms of access to funding over the past year or so. And this group of developers we expect will continue to outperform the weaker one, and they will gain the market share from those weaker players as well. And therefore, this group of developers we expect will consolidate consolidate the sector in the next in the future.
Okay. Yesterday we were talking, I think yesterday or the day before, we were speaking with UBS, their head of equity research for financials, and essentially Mei Yan talked about how, the role of the banks in providing the financing here. How are you, I don't want to ask calculating, but how do you discount the ability of banks to provide financing for these unfinished projects? And to Yvonne, as a follow-up to Yvonne, then how do you determine which of these projects actually get that banking financing?
Yeah, unfortunately, I am not an analyst covering the banking sector. I may not be able to comment too much on the banks from the bank's perspective. But going back from the China property sector, we do see that banks have been providing some financing for stressed developers to complete their unfinished projects. Some progress has been seen, but still the scale compared to the whole situation remain quite small. And what we also understand is that those financial institutions will also have their commercial consideration when extending loan to developers, so that they will assess the quality and the ability of the getting the money back after lending to this group of developers.